Thank you, everyone, for joining us. I am Mike Rain, the editor-in-chief of Canadian Musician Magazine. So I'm really thrilled to be bringing you today's webinar. This really came about a few months ago. After a previous webinar, our guest today, Sondra Gold, reached out to me and be like, hey, I'd love to do one of these webinars with you because there's a lot of really practical financial advice that musicians need and are often looking for. So I kind of jumped on that opportunity and was real honored that she reached out and asked to do it. So of course, with me is Sondra Gold. She's a Toronto-based accountant, specializes in small businesses and the cultural industries. She's worked with countless musicians and music companies, working with them hand in hand to ensure their immediate needs are met and to prepare for future ambitions. Just as importantly, Sondra equips them with the tools they need to understand how to run the accounting side of their business. She's previously spoken at Coalition Music, the University of Toronto's Monk School of Global Affairs, the Music Managers Forum, Song Studio, and more. So Sondra, thanks so much for offering to do this and joining me. How are you doing?
Absolutely. Yeah. Thank you for having me. It's probably one of my favorite things to do, to talk on these topics and, be part of the industry in that way. So my background before I got into accounting was in accounting. However, I've always been interested in the industry. I danced competitively for 10 years. I did musical theater throughout high school and university. And my parents are involved in the industry as well. So it's always been a part of me. And I love to bring this part so that artists can do what they do, create music, perform, and really feel in control of their finances and be compliant so that they have more money to invest in their business and be successful and be able to do it as a profession.
Beautiful. I love that. I didn't know you had that family background in the industry. That's fantastic. So to kind of start it off, since we're not too far from tax season with April 30th being the tax deadline here in Canada for individuals, at least, let's kind of start off with this. So generally speaking, how much more complicated are taxes for musicians versus someone with, the quote unquote regular job where they're kind of just simply copying their T4 into TurboTax or whatever? Like, how much more complicated are taxes for the independent musician?
Yeah. I mean, there's a level of complication to anyone who's operating as a sole proprietor, whether you're a musician, a songwriter, or any other type of self-employed business, because as an employee, you're working for someone else's business. So they take off your taxes, CPP, EI, you have your slip, and then there's some other tax credits you can have on your personal return, but it is quite simple. Once you have a self-employed business, it opens you up to deducting all sorts of things against your income, and no one's withholding taxes and CPP, and there is no EI in those cases. And so you have to make sure that, one, from a tax perspective, you want to be paying only what you need to be paying in taxes and keep everything else for yourself and your business. So you want to be deducting things that can go against your income. You want to be saving for taxes. So there's certain tax planning that can happen. And also you want to make sure that if you should be registered for HST, you're registered for HST, which is a separate filing, but you may be required based on your income. So it is more complicated because it's another schedule in your tax return that requires bookkeeping, record keeping, saving for your own taxes. And so using a program that's more intuitive doesn't really give you all the information you need to be getting the best tax return filed.
Mm-hmm. There's a number of things you mentioned in there that I think we're going to unpack over the course of this conversation. And I should just note for everyone watching and listening that we're going to be saving time, 15-20 minutes at the end for Q&A audience questions for Sondra. So if you have those, please put them in the chat, maybe in big capital letters, put question. My colleague Andrew is watching the chat and is going to be grabbing those questions to pass to me to pass on to Sondra at the end. So yeah, if you have a question, just say question in the chat, followed by whatever it is. But yeah, to kind of bring it back to some of what you were just saying there, Sondra. Actually, let's start with the HST one, because when you and I were emailing before this, you said that's a common question that you get. And since you brought it up there, when should self-employed musicians and others in the music industry, when should they be registering for HST?
So when you're making more than $30,000 gross, not including grants, or royalties, you're required to be registered and part of the HST system. And the way that they calculate that 30,000 is that, like, they look at your gross sales on a 4-quarter rolling basis. So if you go a full year and you haven't hit 30,000, you drop off January, February, March of the last year, you add January, February, March of the new year. And if you hit 30,000, that's the day you have to register. Before that, it's voluntary. You can register, which most of the time it's beneficial and it means more money in your pocket. So the way the HST system works is on top of your fee, you're going to be charging this sales tax. However, royalties, there is no HST. So if you're strictly a songwriter and earning royalties, you're not going to be collecting on top of your income. There's an agreement with the government that's taken care of. But if you have other income, so if all your income was in Ontario, you're adding 13% on top of your fee. So in this case, your income doesn't change, but you're now a collection agency for the government, collecting on top of your fee. Amongst your expenses, whether you're registered or not, you're spending HST. If you buy a piece of equipment, if you pay for rental space, if you're paying a subcontractor, you're paying HST in most of your expenses. And so at the end of the year, if you've been registered, there's an HST return that's filed alongside your personal tax return that summarizes the HST activity. So you would have your sales, and if it was all, taxable from a HST perspective, times 13%. In Ontario, there's your HST collected, less all your HST spent, and it's only the difference that you give to the government. So you get to repay yourself for all the HST that you've been out of pocket throughout the year. You pay the government the difference. Or if all your income is royalties, or none of your income was in Canada and you haven't been collecting any HST, but you've been spending HST, you're actually in a refund position in that case. And the government pays you back for all the HST that you're out of pocket. So once you file your HST return and you pay the government or the government pays you, there's no more HST in your tax return or in your bank account, as if HST never existed. So people who are not registered for HST, or people who are not businesses and pay HST, or you in your personal life, when you pay HST, that sticks with the government. That's how the government earns their sales tax. But if you're part of the HST system, it's like getting a discount on your expenses, because all of a sudden something that costs you $113 is actually only $100 because you're going to get that HST back. So when we're talking about like what is a deductible expense, which I'm sure we'll touch on here, and HST, it's the same rules in terms of what you can deduct and how to keep your receipts. So if you're doing it for your expenses, there's no extra step except that this is trust money. So the extra step is that you have to collect on top of your fee, not your money. I often recommend a second bank account, collect that HST, move it over, don't spend it. Even though you won't owe that entire HST amount, it's important not to spend that because that's trust money. So often I'm registering clients for HST even before they hit the 30,000, because it's a discount on your expenses. So as long as who you're working with has no issue paying you HST, which they shouldn't, it's more money in your pocket.
That's brilliant. And just another note for everyone, if you're watching, like, wait, I need to write this down. That's a lot of information. This is going to be posted on our YouTube channel. And obviously, if you're here, that means you're registered for this. You'll also be getting an email with a link to the recording of the webinar. So I'm guessing there's going to be a lot of information here that people want to go back and reference and write down or take notes on after the fact. Since you brought up the deductibles and expenses, what can a professional musician write off against their income?
That's probably the most popular question I get, because there's all sorts of money you're spending to earn or try to earn that income. So within the Tax Act, we want to grab an expense. So CRA says no to a few things: no single meals. You can't buy yourself a coffee on the way to a meeting and call it a deduction. No golf green fees. They don't like that one either. But there's all sorts of things you can deduct, right? So if you're earning income, you didn't spend $0 in order to earn that. And so you're allowed these deductions. So, for anyone in this industry, you're going to have cell phone, internet, we're going to back out a personal percentage of things like that, because we can't logically say that 100% of a cell phone or 100% of internet is business. You're going to have Spotify subscription, streaming fees, a home office, whether you rent or own. There's different risks, but there's a home office there to deduct. equipment rental, if you've made an album, all your album costs, if you're touring, all your touring costs, travel, Ubers, Airbnbs, hotels, meals, entertainment. So if you're taking someone out, wining and dining them, let's work together. As long as you're paying for at least 2 meals in an instance like that, there's a deduction there. So only 50% is actually deductible because the government is assuming every meal of yours is you plus one other person. That other person is deductible at 100% and you're deductible at 0%, which is where they get this 50% from. So even if you took 2 people out and now there's 3 meals, it's still 50%. And that's the government's way of saying, don't write off every meal. Right. And there's support that they would need for that. But also there's catering, which is different than meals and entertainment. If you're having a show or making an album and you're bringing in platters so that everybody eats and gets back to work, that's the idea. That's 100% deductible. That's really different than the wining and dining. You're going to have promotion. You're going to send out bottles of wine. Thanks for working together. Thanks for supporting me. And maybe, from your music, you're going to have merch. So now you're going to have the cost for making merch and promoting yourself that way. So all sorts of things. And when you're spending money to earn or try to earn income, is the line I like to give my clients. Try being key too. So maybe you've gone out for a meal and you don't end up working together. That's still an attempt at trying to earn income. Maybe you went on a promotional tour and you didn't really make any money because you're just getting yourself out there for that album or that song. That it's still deductible expense, all the money you spent on that adventure.
Interesting. For a lot of musicians, if you're talking about a home office, for them that kind of means, often that means some form of a home studio, even just like a spare bedroom with computer monitors and so a guitar, a basic guitar rig or whatever it is.
For sure. So
that simple home studio, is that your office?
Yeah, all that equipment you're talking about is deductible. If you have a separate space, whether it's a home studio, a second bedroom, a corner of your living room that is the office, you want to be taking an expense that's reasonable based on the space. So the government has kind of adjusted a bit. I'm seeing a trend because of COVID. They're recognizing that not everybody has a separate room that is the office. They made a really complicated calculation for anyone who was working from home during COVID. However, I've seen that shift. So if you rent, it's going to be a percentage of your rent, insurance, any utilities you're paying, and you have a deduction there. And if you own, it's a percentage of mortgage interest, utilities, property tax, repairs and maintenance, and you have deduction there. Ideally, it is a separate space that you can, these are the square footage. This is my space that's strictly used for business purposes. It's easier to support. However, that's just not realistic. I used to say they don't like it if, during the day you work from your dining room and at night you clear it off and that's where you eat. It's a mixed use space. They don't necessarily like that. But as long as we can support that it's reasonable and it is used for business, then you definitely have a home office deduction there, on top of if you have studio storage or if you have studio rental expenses from outside of your home, that would also be deductible. Vehicle expenses is another one. So if you're renting a van because it's carrying all your equipment to go do a show, that's 100% deductible. If you yourself have a vehicle and you are driving from your home office to the meeting to pick up another, some office supplies, business expense, back to your home office to continue working, all of that driving is deductible against your taxes. If you're driving from your home office to pick up some supplies, there's a deduction. And then let's say you have to go to the dentist and then you went back home. From the supplies to the dentist and back home is not actually deductible because CRA considers that as if it's your commute. So as an employee, you don't get a deduction to drive to work every day. So as a self-employed person, it's really the driving business to business that you get that deduction.
No. You have to be hyper organized.
Let's talk about what type of support you need, because it's true. Like you can write off everything under the sun, but if CRA comes and asks a question or wants to see support, you need to be ready for that to lower the stress of writing these things off.
Yeah, absolutely.
So it can be stressful. But it's nothing to be afraid of. If you're organized and you have your support ready to go, it's more of an annoyance than it is anything.
Yeah.
Right? So if CRA was questioning you or wanted more information for your business statement, typically it would be an HST audit or an income tax audit. Maybe they've picked out one thing, like they went through a project where they were auditing vehicle expenses a ton. I just got one for meals and entertainment and promotion. So I'm not sure, but it might be going that way.
Okay.
So either they're doing an audit on everything, or maybe they're picking one thing. No matter what, they're going to want to see the itemized receipt.
Okay.
So organizing your bookkeeping, whether you have a separate bank account or you go by cash receipts, is fine, but they're going to want to see the itemized receipt that shows you what you purchased. So if you have just bank statements and credit card statements, that's not sufficient support for them. Because if you buy something off of Amazon, if you go to Shoppers, Walmart, even Esso, you fill up your car, $40, you may know that's what you do at Esso, but they may say, well, that could have been lottery tickets, right? They want to see the itemized receipt. In addition to that, for meals and entertainment, they want to know who you met with, that person's contact information, and the topic.
Okay.
So I've seen the government ask for this. I've never seen them actually contact the person
Yeah.
with. But I think that they're trying to make sure people are not taking advantage of this section. And I've also been through audits where someone didn't want to give that information, and all the meals were denied in that instance. And then for vehicle expenses, they want a mileage log. Starting date, starting kilometers, ending kilometers, where you went, purpose of your trip, right?
So I was going to ask them, like, how do you know, like, if it's business to business, that counts as deductible. Like, do you literally have to be writing that down every day?
Right. So there's lots of apps that are available to help with this now.
Yeah.
There's one for vehicle expenses. It's called MileIQ. That seems to be a popular one.
Okay.
You download it and it prompts you, like, was that drive business or personal? You say yes or no, and it kind of creates this log for you, and maybe you can fill in some more details. But there's also lots of bookkeeping programs out there that have a mileage tracker attached to it. So if it's an app on your phone, it's super easy. I would say realistically, most of my clients and general clients don't keep this log because it's tedious.
Yeah.
And if you're not driving a ton for work, it's easy to forget it or leave it off, right? So you can always go back, try to recreate one based on your calendar and stuff, but these apps have really made it as easy as possible. So if you are doing a lot of driving for work purposes, that's important to be able to have that, so that if CRA is questioning things, it's there. And it's the same rules for HST. If you got audited for HST, it's the same type of support that they would want.
Okay. Another question, very specific to musicians, but on taxes, what are the key things for keeping in mind about reporting royalties for things like recorded music versus payment for things like a live performance?
Right. So it's important that as a musician, your royalties are business income and not passive investment income. So the slip that you would get from SOCAN, for example, is a T5. So there's a way in tax programs to move that income over to your business statement so that you can deduct expenses against it. If it's left as investment income, there's nowhere to deduct expenses. So in that regard, that categorization is key. And if you have an industry specific accountant, they know that. So they know to transfer that over. A couple of years ago, there was no way to show that that's what was happening on the tax return. And so I went through a lot of CRA phone calls where they're saying, oh, you missed the SOCAN slip. I'm like, I didn't miss it. It's over here because it's business income. And now a lot of the programs have a way to transfer that income right onto the business statement. So there's that. And then there's also the HST factor, making sure that whomever is preparing the HST, or you're aware of it, that SOCAN income does not go into that $30,000 threshold. And also that you don't collect HST on top of SOCAN royalties or any royalties.
Okay, interesting. In terms of making sure you've set aside enough money for the CRA that you're not going to be stuck with this bill you're not prepared for, is there such thing as like a safe percentage for putting aside on tax income, or just a rule of thumb for how much you should set aside from your untaxed income for the CRA to come take at the end of the year?
Yeah. I wish I could give you a number or a percentage.
Yeah.
I think that would be really helpful, but it depends.
Yeah.
It depends on what your tax return looks like, right? If you're in a higher tax bracket, then if I said save 20%, that's not going to mean anything, right? So if if you're employed, like you have a day job and this is your career building up evenings and weekends, your employment income is going to set you into a certain tax bracket. And so any income you earn, net income you earn beyond that is going to be that rate or higher. So it's hard to be able to say this is the percentage. If you can do some type of budget or projection for the year, or you know approximately because it's repeating every year, then there's ways to figure out what percentage that is. But on top of income taxes, if you're self-employed and you haven't maxed out CPP from your employment income, you're also paying into CPP. So as an employee, you pay half of the CPP and the employer pays the other half. When you're self-employed, you're viewed as both. You're the employee and the employer. And there's I think I sent you a link to send out, but there's a way to calculate. And then once you hit the max, you're fine. But not only are you saving for taxes, you're saving for CPP, which is going to be part of your tax return, but it's in addition to.
Okay, brilliant. And yes, Sondra did send me a number of helpful links to different resources and calculators that I'll put in the chat here at the end, but that will also be in the email that everyone watching will get later today after we've wrapped up here. In terms of incorporating, like when should a self-employed artist think about, this is kind of in two parts because you might want to explain what it actually means to incorporate yourself as a self-employed artist, but also when should you begin that process or even start thinking about it?
Yeah, it's a great question because it's a different answer when I'm speaking to people in this industry versus not. So there's three different ways you can operate a business, and I'm not talking as an employee, that's someone else's business. But if it's your business, you can have a self-employed business where you have that business statement on your personal tax return, you pay personal taxes on your net income. You can have a partnership. So if you're joining with someone else and you have a partnership, you take your share of the income and expenses and put that on your personal tax return. And then the third option is this corporation, which is a separate legal entity. So it can be sued, it can sue others, it has its own tax filing, it is separate from you as an individual. And so often in any industry, the number one reason to incorporate is limited liability. So I'm not a lawyer, I don't pretend to be, but you have a separate entity that can be sued and it protects your personal assets if that was a risk or that was a thing. Within the industry, the two most common reasons I would say that musicians are incorporating, the first reason would be when you're making more money than you need to live on. So as a Canadian owning a Canadian controlled private corporation, the first 500,000 is taxed at a much lower rate than your personal. So it's about 15% in Ontario. Personally, once you pass 220,000, you're taxed at 53.5% on the next dollar and up. So it's a very big difference. So if you don't need all your money and you can leave it in the corporation and let it get taxed at that lower rate, you're winning. You can reinvest it in your company. You can take it out slowly, as opposed to all of it hitting your personal return and paying those higher taxes all at one time. So it's a temporary deferral, and there's some tax planning that can happen because when you take the money out of the corporation, that's when it hits your personal return. So you only have that use of that lower rate if you can leave the money in the company. Because whether you are self-employed, a partnership, or a corporation, you can be registered for HST, so you have that benefit, and you can deduct the same expenses, so you have that. The other popular reason I find that musicians or people in the industry are incorporating are for certain grants. There's certain grants that are only available to you as individuals. There's also some of the bigger grants that are only available to you as an established business or a corporation. And sometimes these grants are only available to corporations that have existed for, call it, 2 years.
Okay.
And I'm not an expert in the grant world, but sometimes they'll say you need to be a corporation and exist for 2 years, but they just mean a business. So I will have people incorporate for that purpose to get those access to those bigger grants, even though from a tax perspective, we don't have that benefit yet, but you can see it through the grant. So those would be the reasons to incorporate and the three different setups of how you can arrange your business.
Okay, very interesting. Something I should have asked before when we were talking about royalties and live performance income on taxes. Sorry, I'm just missing my, oh yes. During the course of this pandemic, this existed prior to the pandemic, but we've all seen it increase exponentially during the pandemic, which is live stream performances.
Yeah.
And in the best case scenarios, people have been, through SOCAN and directly been receiving income through live stream performances.
Yeah.
For artists who have been receiving that payment from live stream and online performances, is this treated differently on taxes compared to a a regular in-person performance? Like, how is that treated as income?
Yeah, it's the same as any type of business income.
Okay.
The gray area there would be HST. Because if you can't track who's paying you, if you don't know where they are, you don't know what rate to charge, if any. So if there's a platform that's being used and it's just tips, but that platform is in the US and it doesn't let you, see where everyone is coming from, then I would say that, there wouldn't be HST in that instance. But it's treated the same as any type of business income.
Beautiful. Just a couple more tax specific questions, then I want to get into a bit of just kind of day-to-day money management and best practices for artists. Sure. What are the common mistakes? And you've probably mentioned a few of them already, but like, what are the common mistakes that artists make on their taxes that generally creates headaches for them with the CRA afterwards?
Okay. I would say not registering for HST when you should be registered. Because then you potentially, once you register, there's a risk the CRA is going to go back and say, oh, well, you should have been registered last year. You made 50,000, and then you're responsible to actually pay them that HST. And if you can't go back and collect it, you're out the money. That's a rough one. I hate to see that. Yeah. Another mistake would be not writing off expenses that you can write off. And if you're not organized and you're nervous about it, that adds another level of complexity because then it's stressful. So not writing off things that you could be writing off. Being scared to claim things if you have a loss. So once you have a loss for more than 2 years in a row on a business statement, that's when it alerts CRA to say, hey, do we have a business here or is this a hobby? Right. And so they may send you a letter saying, are you sure? Or they may send you a letter saying, okay, well, can you prove some of these? And sometimes those startup costs, those startup years are big. That's a lot of output without having any, or outflow without having any inflow. And it doesn't mean they're not legit expenses. And depending on what else is going on your tax return, that loss can actually be very valuable to you. So if you have a T4 job, and then you're starting up this music career, or it's another year where you're trying and you're putting money in and you're creating a new album or whatever you're doing, and you have a loss, that loss goes against your day job income. And actually, in those cases, most of the time creates a refund for you because it's as if you've been taxed too much. So they're valuable. So it's nothing to be scared of that you have a loss. We just have to make sure we have the support ready so that if CRA does come question if this is a business or what these expenses are, that you're ready. So the other thing I see with musicians also is if you did get a grant, making sure that we're reporting that income and the expenses that go against it together or in the right period. Because a lot of the time you'll get a grant maybe at the end of the year for a tour. I mean, I saw this tons with COVID, and then you haven't spent the money yet. But it doesn't make any sense to be reporting this big grant and then no expenses, and the following year having this big loss and no income. But they're supposed to go together. So industry specific accountants are important because they understand the industry, they understand how these things work, and they'll pick up on these things.
Oh, brilliant.
Those are the top ones.
In terms of missed opportunities, and you're saying kind of one of the, in your last answer there, you mentioned not claiming things that you should be claiming. So in terms of those missed opportunities, like what are the most common missed opportunities you're seeing artists, I guess, missed opportunities you're seeing artists miss, if that makes any sense, but you know what I mean? What are the things that you're seeing artists miss on their taxes most often that are meaning they're not claiming what they should be claiming? Or
I think that it really depends. I mean, there's a whole variety of them. I think it's tough because most of the people in the industry love it, and that's why we're here, right? And so if you're going to a concert, you may not realize that that's research to you. Like, yes, you're enjoying it, but you're going and you're learning from it and you're picking up tips and you're seeing how they're organizing their stage or how they've done this or that, or their lighting and what their style is. And maybe you're learning from it. It's very different than someone who's not in the industry and going, or, your Netflix subscription. If I don't see cell phone, internet, home office, I'm asking the question, like making sure that you're writing those types of things off. So I think that the most missed are the things when you don't even realize that you're spending that money to earn income.
Okay. The no, in terms of, because what we've been talking about is pretty specific to filling out your taxes and and tax questions. But as I'm hearing here, and I'm sure everyone's hearing, this really requires you to be on top of it year round so that you're
Yes.
ready come tax season. You're not just going to sit down on April 1st or whatever, and be like, all right, time to make sense of everything of the past
Yeah.
year. So in terms of day-to-day money management and planning, what are the best practices
Yeah.
that you have that you would tell artists to be doing?
I think it's really important to be aware of your money flow, your cash flow. That's how you're going to know. You're going to be able to make decisions with that knowledge. And it's also going to be less stressful when it comes to tax time. I know that it's a dreaded time for a lot of people, and they feel that weight on their shoulders until it's filed. And then maybe they still are nervous that CRA is going to ask a question. So if you have control over your money, organizing your expenses, knowing what your income is, understanding the HST rules so you're confident you collected when you're supposed to collect, it just makes everything so much easier, right? And also saving for taxes, so you don't have this unknown, what am I going to owe at the end of the year? You can address that throughout the year to see that you're on top of it. So in terms of organizing banking and receipts, there's 3 different ways to do it, I would say. The first way is by actual receipts. So you have your personal bank account, income goes in there, your expenses come out of there along with your personal stuff, but you have saved your receipts. And you can do that digitally, you can do that physically. If you're doing it digitally, make sure it's a picture or a PDF of the entire receipt, and you've got your backup going. But you can have folders, and then you can get rid of the paper stuff. And then you divide it either once a month, quarterly, or once a year into their piles. So you put all your gas receipts together, you put all your invoices from your subcontractors together, all your equipment together, and you have your totals. If you're feeling out of control and you're only doing that at the end of the year, you can do it on a monthly basis. The more often you address these things, the less crazy it is at the end of the year to try to get those things together. So on a monthly basis, you make your piles, add it to a spreadsheet. You can have your different categories. You know what your income is from the different sources. You know what your expenses are. And if you can look at that and then estimate or prorate for the rest of the year, you can do an estimate of what your taxes are going to be to make sure that you're saving properly. The second way would be to actually have a second bank account or 2 other business bank accounts that you're separating your personal expenses from your business expenses. So your business bank account, business credit card pays for everything business, personal bank account pays for everything personal. That helps you with record keeping and helps you with cash flow too, to see what you actually have available to reinvest in yourself, right? If you're a corporation, it's a bit different. So there's bookkeeping programs for self-employed, and there's bookkeeping programs that are for corporations. Mm-hmm. As a corporation, you need income, expenses, and you also need your assets and liabilities for that balance sheet. So if you have a corporation and it's opened up a bank account, haven't made money yet, so you put $5,000 in there from your personal account as float. That $5,000 has to be accounted for somewhere for your corporation, but that's not income to you. And there's no expense there. That's money in the bank and a loan from its shareholder. So there's bookkeeping programs that I can't remember if I sent you a list, but I can, but there's bookkeeping programs that allow you to do that bookkeeping on a regular basis. Then they've really updated their technology where you can link your business bank accounts so that the transactions come right into the program, you allocate them, and then at any given moment, you can see how your business is going. So from a self-employed perspective, you really need to track income and expenses. And from a corporate perspective, you need to track every single dollar in and out of that corporate bank account and credit card, income, expenses, assets, and liabilities. Okay. And making sure you have the support as you go.
Mm-hmm. And in terms of just day-to-day money management best practices, not even about bookkeeping, but about just making sure that you're living, I don't know if comfortably is the right word, but just that you're managing your income. Because like with artists, the reality is a lot of it's not like you get a weekly steady check. The money can kind of come in fits and starts. You may get a bunch related to a tour or project or whatever it is, and then not get much at all for a couple months, and then get a kind of another lump sum or whatever it is. The money is inconsistent, sometimes hard to predict. So what have you seen about the artists who just best manage their money? Again, not specific for tax purposes, but just about running their life and making sure that they're not you know,
Yeah.
living hand to mouth
So-
some weeks.
Right. Having a budget and then filling out the actuals against your budget is important so that you make sure your inflows are exceeding your outflows. If you do this budget and then you do the actual and you're a negative, then we need to either decrease those expenses and up that income. You know, look for grants, OPM, other people's money, love that. Lower expenses where you can, and put a line item in your expenses if you're, you know, for cash flow purposes, savings for tax and savings for life, whatever your goals are, whether it's savings for retirement, savings for a home, investments, if you're putting a certain amount into your investments every year. I mean, we could talk about tax-free savings accounts and RSPs as well. That's definitely could be part of the plan. Also spending money in a smart way. So, you know, spending your time, your resources, so your energy, your money to make you income, and not trying to spend your money or time doing something that is not your thing. So my base example is, if bookkeeping is not your thing and you have a corporation and payroll, which we didn't even speak about, is not your thing, there's programs, there's accountants, there's people out there to do those things. Take it off you so that you can spend your resources, your time, your energy earning the income, as opposed to trying to do too much that is not, you know, with what you do best. You end up spending more money.
Okay. Perfect. We're getting close to the Q&A time, but just a couple others kind of specific to these weird pandemic times that we're in. You know, of course, during the pandemic, a lot of artists and music industry professionals had received CERB, and in the past year received the program that came after CERB, the Canadian Recovery Benefit. What do they need to know about declaring that income on their taxes? Or that's commonly misunderstood, at least, about those programs.
For sure. So the main things about that is CRA is going to issue you a slip. So from my perspective, if you didn't get your slip and you're a client of mine, I could download your slip, so I'll have it. They're only withholding a certain percentage in income taxes on that recent one, the CRB, whereas CERB, they didn't withhold anything. And so depending on how the rest of your year went, you could likely have a tax bill. So when they're withholding that amount, it's a blanket percentage, no matter what your income is. They have no idea what tax bracket you're in when you do that. So if you did work the rest of the year, and then for a period you were laid off and you have to rely on this, or your kids were home from school, or you were sick and you couldn't work, they're not withholding enough taxes if you have income for the rest of the year. So it could be a surprise at the end of the year to say, wait, I thought I'm employed and I was receiving this. How come I'm not, you know, how come I have a tax balance owing? I usually have a refund, or I usually don't owe this much. That's why. So that would be the only thing to watch out for. In terms of your deadline, if you owe taxes, it's due April 30th. So there's lots of time to get your stuff together, get your accountant on it, to estimate what that's going to look like, so that you have time to prepare for that balance.
Perfect. And for the remainder of this year, is there much left in terms of government relief programs that artists should be taking advantage of?
Yeah, they change their relief programs on a daily basis, which is why I sent you the links, because you kind of have to go through as a checklist, and there's even certain things that are available in certain industries. So you go to the link that I sent you, which you'll share with everyone. Are you an individual or are you a business? And then you go from there and you see what applies to you. And then and every type of support from the government has its own rules. So I don't see a lot of income level thresholds anymore, but it's, you know, you now have to have your 2020 tax return filed to be able to get a lot of the 2021 support. And then sometimes they close off the small business support and then they open it up again. So anytime you feel, you know, keep up on those websites the way I do. You're researching, Google, see what's there, see if you can apply, see if you can get it, and go from there. It's unfortunately, it's overwhelming for everyone because of the amount of information, then the amount of changes, and because everybody's situation is slightly different, it's really a case by case.
Okay, beautiful. And I was going to just do a big block copy paste of your links into this chat, but apparently it's not letting me. I may, I don't know if I'm going to have to do this one at a time, but my apologies for the clunkiness of this.
I think they're popping up. I can see them.
There you go. I'm just having to copy paste them one at a time because I was.
Oh, I see. Perfect.
Let me.
And
There you
it's
go.
also important to mention that everybody's situation is different. Like the when is it time to incorporate conversation is a big conversation. It's not as simple as, oh, I have a grant. It depends. I mean, if it's your own business and yes, you're making more than you need to live on, so yeah, let's leave it in the corporation. But if you also told me you plan on buying a house in the next 2 years, incorporating may not be the best thing for you because you may need a personal tax return that is very strong in terms of income so that you can get a mortgage from the bank, or maybe a B lender is okay. So I want to just say that everybody's situation is different, and reach out to your accountant if you're in need of an industry specific accountant. I'm definitely taking on clients, but you have to have that conversation about your situation specifically.
Beautiful. All right. So Andrew's passing me the questions here. Do you want to jump over to some audience questions?
Sure.
All right. So let me just get to the top here. It looks like we have a bunch coming in. All right. So first off, from Michael B. He says, I've applied for the CWLB. One period is in 2021. And just off the bat, are you familiar with CWLB? Because I'm not sure what that stands
And
for.
a lockdown benefit.
Oh, okay. So, all right. So Michael, sorry to restart this. I've applied for the CWLB. One period is in 2021, but I've applied for that week in 2022.
Yeah.
Which year do I declare that income in?
That's a good question. Typically income is based on when you receive it, but we don't even really need to worry about it because CRA is going to issue you a slip for it.
Okay, perfect. Keeps it easy. From Irene, my understanding is that piano teachers or other private music instructors do not need to charge HST. Would this only sorry,
go ahead. I'm like excited about the question. Yeah.
she just adds, would this only affect the income for people with other music related income?
So it's a bit of it depends. Then there are specific HST rules to music teachers, piano teachers, or lessons. So if you're giving lessons where at the end they increase a level or they get a certificate, it's true that lesson is exempt from HST, but that doesn't mean the rest of your income that wouldn't be music lessons is not exempt.
Okay. Another one that came in as a DM, how do we decide if we claim something as an expense versus asset that depreciates, such as patch cable, strings, webcam, microphone, that sort of thing?
So technically, CRA wants to see you capitalizing on your tax return, anything that can help you earn income over more than 1 year. So for me, I use $1,500 or $2,000 base for every client. So if they say I bought a new phone, I bought a new computer, I got a new piece of equipment, and it's less than that $1,500, $2,000, I write it off. So I apply that accounting policy to all my clients unless they tell me otherwise, because I find that with technology, we're replacing a lot very fast, right? Mm-hmm. But if you're spending more than that, then it's true. There's a part of your business statement where you capitalize it, and then you get to deduct a portion of it over multiple years, because the idea is you're not spending that amount of money to go against 1 year's income. You're spending it to help you earn income over multiple years. So it depends on what we're talking about in the amount, but you're not going to capitalize a stapler, right? So there has to be some level there that you say, okay, this is going to last me. I don't buy this every year. Mm-hmm. We capitalize it and write it off.
Okay. From Michael V, regarding GST in British Columbia, what about separating my music teaching income from gig income as two separate businesses to avoid having to start paying GST? I get different responses from different accountants and even CRA agents.
Yeah, I'm sorry, I don't understand the question.
I'll just restate the start of it. Regarding GST in British Columbia, what about separating my music teaching income from gig income as two separate businesses to avoid having to start paying GST?
Yeah, you can have as many, GST accounts as you want. They end in RT0001, RT0002. But there's also 2 lines on your HST GST return where you report taxable and exempt. And so if you separate that out, that should give the government enough information that they don't see that why there would be HST charge on exempt income. When the HST department and the income tax department communicate, I don't find that they communicate too often, but they do communicate. And so if your income statement or your business statement and your personal return shows X amount of income and your HST return has a different number in the total income, that can cause a question. So if you separate out exempt supplies from taxable supplies on your HST return, but the total income is the same, that should avoid questions from the CRA. Does that answer that?
I think so. And he was, and this is over my head, but he was saying specifically about GST, and you were talking about HST. Are they
the same
similar?
thing? Sales
Same thing?
tax,
Okay.
sales tax, just different rates across Canada. So if you're
Okay.
in Ontario and charging British Columbia, it's 5%, not 13%. It's just different rates.
Okay, perfect. For Carmela, can international competitions and travel expenses to those competitions be deductible? She says, e.g., a classical artist.
Yeah, absolutely.
No, that's simple.
Yeah.
And another one. Someone was commenting just as I was commenting on who has the time to keep track of every trip or drive that they do day in and day out.
That's why the app is really good. And that's why I said that most of my clients don't. Like, it's just not realistic. And CRA knows that. CRA knows that, which is why I've recreated these with the help of clients many times. But the more documentation you have, the better position you're in to show CRA. Like, we used to submit a tax return and we could attach things to it. So if we were submitting, we would drop off tax returns to the tax department and they'd be this thick with medical donations, support. And now you don't, everything is online. And so this test check that the CRA does throughout the summer, all the way into the fall, is to check on these things.
Mm-hmm. And and from Irene, we actually have a pretty specific question about those driving logs. But she says, she must be a lessons teacher. She says, if one drives a student, or if one drives two students and always the same students each week, could I just put X kilometers for each week since it stays the same?
Yep.
Okay, perfect. For Marianne, if more info on how to move T5 income slip to self-employed business income so expenses are deductible, please.
It depends on the program you're using, but if the program doesn't let you, you don't enter the T5 and you put it as income on the business statement, but we just know that there's a high chance CRA is going to say, hey, you missed this slip. So CRA will have copies of your T4s, T5s, T5008s, that it's an investment one, RSP contributions, certain slips. And so if you don't put those income slips, especially on your tax return, they have something called a matching program where they go through and say, doesn't match. And they either ask you or they send you a reassessment. And then you have to say, no, Mr. Government, that's not what happened here. Here it is. Here's the business statement. Here's how I show it. So if the program lets you, even better, but you just notate that it's a T5.
From Loretta, is grant money considered part of your yearly income?
Yes.
Simple. From Michael V, are credit card statements not enough to submit for expenses? They don't always include all the details and tax breakdown.
No. So they're not, because it's proof of payment. It's not proof of what you've purchased. So my example was SO. Like if you have SO $40, we know it's gas, you know it's gas, but you could buy lottery tickets, you could buy lunch, like there's all sorts of things you could buy in there. So the itemized receipt that lists out what you purchased will have the details of gas at such price per liter, and this was your total. It also breaks down the HST. So if you're going through an HST audit, a credit card statement doesn't give you the HST number of the company that you've paid, the date, all that stuff.
And similar to that, or related at least, can we go 100% digital with receipts now, including taking photos of the paper receipt and then shredding the paper receipt? You
absolutely can. And if I'm submitting support to the government, I'm submitting it virtually, like online. So if somebody handed me a stack of things, I'm scanning it to get it digital to then send it. So you can definitely keep digital. Just make sure you've got the whole receipt there and that you're keeping your backup. So you have to keep your receipts, a record of your receipts, for 6 years from the date of assessment. So I typically tell my clients 7 years, and everything else you can get rid of. But yeah, if you can go digital, do it.
Beautiful. From Carmela, what about performance outfits? What is a reasonable percentage to declare?
Yeah, so Costumes, wardrobe, hair, that's a good one. And I should have mentioned it because that's a big one for being in front of the camera or on stage. So if you got your hair done for a show, that's deductible. If you got your makeup done, or you have a makeup kit you use for your shows, or you paid a makeup artist for a show or a red carpet event, that's deductible. If you have costumes, if you buy clothes specifically that you wear on stage, that is deductible. But if you buy jeans and a t-shirt, because that's your look on stage, but that's also what you wore to the dentist or to pick up your kids or go to the mall, that's not deductible. So costumes is what CRA is actually looking for. They're looking for like a period piece costume, or if your style is completely different on stage than it is off, that's what they're looking for. So to not go back and pick out every single receipt. If you have to go back, you can apply a percentage you think is reasonable. But at the end of the day, if CRA is looking and questioning, they're going to want to see the receipt, and they're going to want to either see support, which could be easy with a picture, or some type of explanation that this is your business wear for your business, and you don't wear this for your personal life. So that's separation.
And Carmelo had asked, what is a reasonable percentage to declare? Is there any way of knowing that, or any
it depends.
rule of thumb for
it's also how risky are we willing to go here? Because technically it should be only, you're writing off only the single use purchases. So if you buy black t-shirts and you wear them off stage and on stage, technically 0% there. If you earned nothing and you spent $10,000 on a wardrobe, not to say that that wouldn't be legit, it could be, but that's a higher risk than you earned X amount and, a small, or, writing off a small percentage. So I can't say exactly, because it really depends on how much risk you want to take, what your support looks like, and what it is. If 100% of that $10,000 was costumes, wardrobe, clothing for work purposes, then write it all off.
Cool. Hillary says, I'm in a music partnership and have a business bank account, and that all partners have access to. A lot of expenses go through that bank account. If I am purchasing instruments, equipment, and home studio through my personal account, can that still be claimed as a deductible in my personal tax return?
It's a great question. Yes. So you'll pick up your percentage of the income and expenses, and then further down on that, your share of partnership business income, you can further deduct your expenses. And that's very common, because in a partnership, you're agreeing on what is going through the partnership. Which equipment is the partnership buying? What is the partnership going to pay for? But often I'll see outside of that, everyone has their own cell phone. Everyone has their own home office. Everyone has their own equipment, their own internet. And you can continue that, basically the deductions, and write off anything that you were personally out of pocket that the partnership didn't pay for.
Okay. Kristen says, if a band or artist has not registered as a business yet, how can the expenses related to their music be used for tax purposes? Is it better to keep the receipts and use them when they actually register as a business? And if so, how much time do they have to use the receipts? For example, from 3 years ago.
Yeah, you want to be claiming the expenses in the year that you had the expense. Okay. Technically, you shouldn't be claiming expenses from 3 years ago. You should be adjusting 3 years ago to pick up those expenses. So even if it's going to be a loss for a couple of years, you can put that on your return. You don't have to register as a business to be a business. If you hadn't registered for a business and you earned $10,000, CRA wants to know about that, and they're going to tax you on it. So once you decide you're in business, you're in business. There are ways to officially register a business, which, during COVID, I saw that more than ever, that allowed you access to some business assistance that if you hadn't officially registered, you weren't getting. If you have an HST number, you're a business, you have your business number. And sometimes grants and certain things, or certain business like the fact that you're a registered business, but you don't have to be. So, and claim your expenses as soon as you incur them. Work with your accountant if it's a scenario where you're making an album and it's not ready for release, for example. There's ways to capitalize that, because it doesn't make sense to be writing all of that off if you don't even have a product available to earn income yet. Or if you have a grant and you have all the expenses to go against it, there's ways to record that. But if it's everyday expenses, as you start up a business or as you have a loss for that year, claim it.
Okay. Just returning the gentleman that had the question about GST and splitting income for GST purposes. He says, just to clarify my question, in a situation where I make gig income of 25,000 and private teaching income of 10,000, do I have to register for HST, or can I show them as separate businesses to not go down the HST rabbit hole?
I see. It's not a rabbit hole. Okay. So it's true that it's trust money. And when you register for HST, you are opening yourself up to another area that could be audited and that you'd have to deal with for sure. But it's the same rules in terms of keeping your receipts. In BC, it's different because it's not 13% discount on your expenses. And there's PSC, there's other complications. I don't believe that teaching income would be part of the 30,000, but I'm not 100% sure. If you want to send me an email, I'll get an answer for you.
Okay.
I don't think so, but I can't say for sure.
Okay. And someone is asking, can you just say the name again of the app you were referring to?
MileIQ.
MileIQ. Okay.
But there's other ones. There's Everlance, EVERLANCE. That one I believe you have to pay for, but that's an expense tracker and a mileage tracker. So you can scan and store your receipts and do the mileage tracker. And then if you're using QuickBooks or any of the bookkeeping programs out there, they have that ability as well.
Okay. Loretta asks, if I get a good size grant, should I sign up for an HST number or make the artist company into a corporation?
It depends. So
Can't
I
speak like
believe it
lawyers.
should be registered for HST because most grants, it can't say 100% because I've seen it, but most grants are not going to give you HST on top of the grant. So when you're creating your budget on how you're going to spend that grant, you don't include the HST spent. So the grant is just covering off the expense. You self-fund that HST, and the only way to get it back is by being registered for HST and claiming those ITCs, those input tax credits, the HST spent. So most of the time, my answer is going to be register for HST.
Okay.
And then should you incorporate or not, it depends. I hate saying that, but it does.
So accountants speak like lawyers. It's always, it depends. There's a lot of HST questions. Irene asked, is it too late to register for an HST number now for doing taxes for 2021?
Yeah, so you can go back up to 30 days to register. If you realize, oh, wait, I made 30,000, then you go back up to the day that you made 30,000 and you have to show CRA that you had hit the 30,000 or that you were collecting when you didn't have a number, and that's how they backdate you. It's not a short process, but that's the only way. But if you had not hit 30,000 and you were not collecting HST, you can go back up to 30 days.
Okay. What time is it? Sorry, 2 more quick questions, and then that'll bring us to the end. Actually, I think it's 1 more. Paula says, what are some recommended digital receipt scanning apps? Going back to digitizing your receipts.
Yeah, so Everlance is one.
Yeah.
And most, like I said, most bookkeeping programs allow you to attach a digital receipt right to the expense. So like my bookkeeping is done in QuickBooks. So if I open up my meals and entertainment listing, I can see all of my meals and entertainment receipts right there, and I can add in notes of who I met with and their contact information. So a lot of the bookkeeping programs do that. Expensify is another one, and Everlance, I've had a couple clients use it and they really like it. But just Google receipt tracker. I think there's so much competition out there.
Okay. And sorry, just some very last minute ones coming in here. Irene had a follow up. Does the $30,000 income have to be non-teaching related?
I feel like that's similar. Yeah, I don't think the teaching income, you wouldn't have to register if all your income was teaching income, because it's not, you're never going to collect HST. The same way if all your income was royalties, you don't have to register. You're never going to collect HST. Does that answer that?
I think so.
Okay. Cool. Well, if anyone has any other questions or I wasn't clear in my answer, feel free to reach out.
Okay. You have time for 1 more, and this will be the last one. Juliana says, if we are registered in Quebec as a partnership, we have an NEQ number, but not incorporated. Do we also have to register our business at the federal level or only within our province?
Yeah. Quebec is like another country. Their rules are complicated and different. I believe the answer is yes, but I'm not 100% sure. I can't say. Okay. I know that if you were a business or you're incorporated, certain provinces require like provincial licenses, and Quebec is one of them. I think it depends on the province that you're going to be doing business in.
Okay. All right. So that's almost, there it goes, 3 o'clock on the dot.
Awesome.
Punctual, if nothing else. Sondra, just thank you so much for doing this. If anyone does have any additional questions, do you dare give out your email? Which
Yeah, no, absolutely. And if you want to, you can put it, like, we can put it here.
Sure.
Or we can put it in the blast you were going to send out with the links.
Yes.
So I'll put it here, Sondra. There it is.
All right, that's simple enough. And Sondra, thank you for this. This is not a topic, as you might have noticed from me tripping over some of the questions, but this is not a topic that I'm especially well versed in. So I really appreciate you reaching out, wanting to do it, walking us through it, and making it understandable. So yeah, big thank you.
Awesome. You're welcome. Glad to be here. Thank you for having me.
All right. Well, let it go. Thank you everyone for watching. Like I said, this will be available on our